Did you know that whenever a war breaks out somewhere in the world, gas prices suddenly jump? Many people assume this is just politics or price gouging, but the real explanation is much deeper. To understand why wars affect oil prices, we first need to understand how oil is priced. Oil is one of the most important global commodities in the world, fueling cars, airplanes, shipping, factories, and power plants. When supply decreases, prices rise. When demand increases, prices rise. And when markets expect supply to fall in the future, prices often rise immediately. Wars create uncertainty and disruption, and the oil market reacts very quickly to both. During the Gulf War in 1990, Iraq invaded Kuwait, and almost immediately global oil prices surged as markets feared a major supply disruption. These events show an important pattern. Oil markets react quickly to geopolitical events, and often the price spike happens even before supply is actually affected. One of the biggest drivers of oil prices during wars is market psychology, where financial markets are heavily influenced by expectations and fear. This buying activity itself pushes prices higher, similar to what happens when people hear rumors that a grocery store might run out of food. At the same time, global oil inventories are not as large as they once were, meaning the system has less spare capacity to absorb disruptions. Because of this, even small supply threats can have a larger impact than they might have had in the past. As the world transitions toward new energy sources, investment in traditional oil production has slowed in some regions, creating a situation where supply growth is limited while demand remains strong. So when wars push oil prices higher, it's not just politics or speculation, it's a combination of supply risks, market expectations, and the reality that oil remains one of the most important resources in the global economy. And that's why events happening thousands of miles away can still affect the price you pay at the gas pump. This interconnectedness illustrates just how vulnerable our daily lives are to geopolitical dynamics in the world. The potential expansion of sanctions that could restrict exports from certain countries adds another layer of complexity to the already volatile oil landscape. Even small disruptions in supply can have cascading effects that resonate throughout the global economy, making it crucial for countries to manage their resources wisely. The reality remains that as the world navigates its way through energy transitions, oil will continue to hold a significant place in our global economy, influencing everything from transportation costs to consumer goods. As we move forward, the question remains how long this environment of elevated oil prices will persist and what it means for both consumers and industries reliant on this vital resource. The fluctuating oil prices in times of conflict serve as a reminder of our reliance on this essential resource, which remains vulnerable to the whims of global events and market dynamics. Addressing these challenges requires a multifaceted approach involving both immediate responses to supply disruptions and long-term strategies for reducing reliance on oil. Ultimately, navigating the complexities of oil markets during wars and conflicts may inspire innovations that push us toward a more resilient and diversified energy future. As society grapples with these challenges, the push for cleaner energy alternatives will likely gain momentum, potentially altering the global landscape of energy reliance forever. This collective effort not only addresses the immediate impact. As we reflect on the past and move toward an uncertain future, it becomes clear that understanding the intricate relationship between oil prices and global conflicts is essential for making informed decisions. By recognizing the implications of wars on oil supply and prices, we can better advocate for policies that prioritize energy security and environmental sustainability. The ongoing dialogue around energy consumption and price stability encourages communities to engage proactively in sustainable practices and advocate for change. As we continue to learn from past events, fostering an informed and engaged public will be crucial in driving the transition to a more sustainable energy landscape. These innovations and community-driven initiatives not only offer viable alternatives to oil, but also empower individuals and communities to take control of their energy futures. Through collaboration and innovation, we can build a resilient energy system that withstands the pressures of global conflicts and oil market volatility. As advocacy for sustainable energy grows, it becomes increasingly important to align public sentiments with effective policymaking to prepare for a future less dependent on oil. Collective action and grassroots movements can drive the necessary changes in policy and investment needed to transition toward a cleaner, more sustainable energy future. By sharing successes and learning from one another, nations can pave the way for a collaborative global effort that prioritizes sustainability while addressing the challenges posed by current oil market dynamics. In this ever-evolving landscape, fostering a culture of innovation and collaboration is essential for empowering communities to find effective solutions to energy challenges. Such initiatives not only contribute to reducing oil dependency, but also strengthen community bonds and promote collective responsibility towards environmental stewardship.